Hey there, and welcome. So, you're ready to close a chapter and move on from your business. We're going to talk about that final step in your GST journey, filing Form GSTR-10. If you've recently canceled or surrendered your GST registration, then you are absolutely in the right place. You've decided to close up shop. You've navigated all the ups and downs of running a business, but now, what's that one last piece of paperwork you need to file to officially close your GST account and say goodbye for good? Well, let's find out. All right, let's get right into it. We're calling this the final GST handshake, because really, that's the best way to think about Form GSTR-10. It's not supposed to be another hurdle. It's more like a formal, final farewell to the GST system. So what is this thing exactly? Officially, Form GSTR-10 is called the final return, and the key word here is mandatory. It's something you have to file once your GST registration is either canceled or you've surrendered it yourself. Think of it as the closing statement for your GST identity. And what are you actually telling the government in this form? Well, it all boils down to what you have left. You'll need to list out the details of your closing stock, figure out the input tax credit you claimed on that stock, and then, from there, calculate the final tax you either owe or the credit you have to give back. And we're going to dig into that reversal part in just a bit. It is a super important piece of this puzzle. So, now that we have a basic idea of what it is, let's get into the nitty-gritty. And we'll start with probably the most important question on your mind. When the heck is this thing due? Okay, timing is everything. You've got a 3-month window to get this filed. Now, the clock starts ticking from one of two dates, either the date your registration was actually canceled or the date you got the official cancellation order in your hands. And here's the crucial part. You take whichever of those two dates is later. That little detail is designed to give you the maximum amount of time. Let's make this super clear with a quick example. Take Mr. A here. His GST registration was canceled on July 1st, but the actual order didn't arrive until July 10th. So, which date does he use? The later one, right? So his 3 months countdown starts from July 10th, which means his GSTR-10 is due by October 10th. See? Pretty straightforward when you break it down.
Now, here's something that trips people up. Is this the same as an annual return? Nope, not at all. Your GSTR-9, the annual one, is for active taxpayers to summarize their whole year. But GSTR-10, the final return, that's a one-time thing. You only file it when you're closing down for good, and its whole purpose is to deal with that leftover stock and the tax credit attached to it.
Okay, so you're probably wondering, do I really need to do this? This next part will help you figure out if filing a GSTR-10 is on your to-do list, or if you might just be one of the lucky ones who can skip it entirely. And there is good news for some of you. If your business falls into one of these specific categories, you are off the hook. We're talking about input service distributors, non-resident taxpayers, anyone on the composition scheme, and those who only deduct or collect tax at the source. If you see yourself on this list, you can definitely breathe a little sigh of relief. But for everybody else, and this is a really big but, it is absolutely mandatory. I mean it. Even if your business shut down with literally zero stock left and you don't owe a single rupee, you still have to file. In that case, you just file what's called a Nil GSTR-10 to officially close the loop with the tax department. All right, let's talk about the part that could have the biggest impact on your wallet. This section is all about the input tax credit reversal, so you're definitely going to want to pay close attention here. Okay, so here's the deal. When you bought goods for your business, you claimed an input tax credit, right? The government gave you that credit assuming you would eventually sell those goods and collect tax on them. But since you're closing down, that's not going to happen. So the logic is you have to pay back the credit you took on any stock you still have left. It's really just a final settling of your accounts. And what do we mean by stock? Well, it's pretty much everything. We're talking about your raw materials or inputs, any goods that are still in the process of being made, and of course, all your finished products. This also includes capital goods, like machinery, although the value for those is calculated a little differently. Let's put some real numbers to this to make it clear. Imagine your business is closing, and you have about 2 lakh rupees worth of inputs just sitting there. And of course, you had claimed the ITC on those inputs when you bought them. So if we assume the GST rate on those goods was 18%, the ITC you would have claimed is 36,000 rupees. And that number, that 36,000, is exactly what you have to pay back to the government when you file your GSTR-10. See? When you put a number on it, the whole concept just clicks, doesn't it?
All right, so you get what it is, you understand the financial side of things. Now for the practical part. How do you actually file this thing? Let's walk through the steps you need to take.
Okay, hold on. Before you even think about opening Form GSTR-10, you've got to get your house in order. These 3 things are non-negotiable. First, your GST registration has to be officially canceled, not just applied for, but done. Second, all your past returns, like your GSTR-1s and 3Bs, have to be filed and totally up to date. And finally, any outstanding tax you owe must be paid off in full. Now, this brings up a really important question. You've gathered all your stock details, you've run the numbers twice, but what if you make a mistake? We're all human, right? Can you just go back and fix it later? And the answer is a very simple, very direct no. This is why getting it right the first time is so important. Once you hit that submit button on your GSTR-10, that's it. It's locked in. There are no do-overs or revisions. So please, double, even triple check everything before you file. And, no surprise here, just like with your other GST returns, waiting too long will cost you. If you miss that 3-month deadline we talked about earlier, a late fee gets tacked on for every single day you're late. And trust me, that can add up fast, so staying on schedule is key.
So, you've met all the preconditions, you've filed accurately, you've filed on time. Phew. Let's look at what happens right after you submit, as you finally close the books for good.
The moment you successfully file, a few things happen almost instantly. You'll get what's called an application reference number, or ARN. That's your proof. You'll get a confirmation by SMS and email. On the back end, the system updates your cash and credit ledgers to reflect your final payment. And then, the best part, your GST account is now officially, finally, and permanently closed.
And that's pretty much it. Filing your GSTR-10 is that final handshake, the definitive end to your obligations under GST. Which, of course, leads to one last thought. You've closed the books on GST, which is great, but as you shut down this chapter of your business, what other financial loose ends might need tying up? Definitely something to think about as you move on to whatever's next. We really hope this helped, and we wish you the best of luck.